So I have to apologize up front. I'm a little bit behind in updating all the emails that I've received for the certain products that I have shown here, and I've really fallen behind when it comes to PIPS Wizard Pro. So let me just catch up here a little bit. People are asking, is it good for day trading? When it comes to day trading, you're looking at your 15-minute chart, maybe your hourly chart, but 15-minute charts, you're looking at because we're looking at currencies, you want to make sure you're trading it. The London session, the US London overlap is also a good time to trade. Once you start getting into 10, 11, 12 o'clock New York time, the markets just aren't something you want to trade. For me, PIPS Wizard Pro is more of a swing trading, trend following type of system. So if I was to go up to 4-hour chart, I'd be looking to take advantage of the swings in the market, right? Swing trading. And just because it shows you where to get in, get out, you still do not want to ignore what price is telling you, right? You can notice this is a range, right? Be careful. With any indicator, with any trading system, understand some basics about price action, and you'll be well served. And this isn't actually too bad. I'll tell you why. Is because we've got our support and resistance areas in this range clearly marked off. We've got compressing price action, and then we get a setup to go short here. We're in an uptrend. Do we want to short? Probably not. And this one shows up here on the breakout. So understand what you're looking at. And when you're looking at trading ranges, there's nothing wrong with taking trades down in the lower half if we're looking to go long in these areas down here if a trade sets up for a potential breakout. It's much better to be already in the trade before the breakout occurs in these areas here. That way, when these breakouts happen, it can propel your trade to the upside. So if we just look at this 4-hour chart, clearly uptrend right now. This is just broken here and rejected here. So you look, we had a breakout, price didn't go that far, and then we had a short setup here. Nothing wrong with that. When you have a breakout like this and it's not going anywhere, it's a failed breakout, why not take the opposite trade? And this trade has dropped for 114 pips. And this trade started on May 8th. So you're up 100 pips on this trade right here. Obviously, all these worked out. Going to the upside. I'm not going to bother showing you that because it's obvious. But let's say we went to the daily chart. And this actually is great that this came up because this is what the alert window looks like. You can actually get this emailed to you as well. And this is telling us that we have, what do we have? We have a sell set up here at 0872. Our take profit is here at 08421. And our stop loss is 08887. Okay. And this trade is actually right here is where it sets up. So you're up a little bit here, 30 pips. So if you're looking for more of a trend following, the trend is still up. You'd skip this. And here's a trend trade right here. Depending how you enter. If you enter at the close, which is when this happens, if you enter at the close of this candle, it rallied up 300 pips and then pulled back, then the orange came up. You would also be able to use buy stop or sell stop orders and just trade it up here as well. And you might just want to keep it totally mechanical. You may say, okay, well, I'm going to get in on here and I'll get out when this shows up. And this would have given you roughly, 160 pips, 170 pips. So it depends how you trade it. You may just say, okay, if it breaks this line, these directional lines here, and closes below it, you'll get out. That's the way you could do it as well. So in this instance, you might be saying, I'm only going to take long trades. And let's say you decide that you want to make sure you're only trading with the trend, not against the trend. There are times to trade against the trend, and price action will tell you that. There's nothing better than seeing run-ups in price and exhaustions. Those are pretty nice short trades. You can just slap on a moving average. Let's go to 100. You want to use an EMA, simple, doesn't really matter. This is telling me all the way through here, I would be only looking for short trades. All right. I'm looking at the slope. I'm not looking where the price is. The slope is short, 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 short. Starts to level out here. But you're saying, well, we have a long trade. You would have missed this move here. Yes and no. You could just decide that, okay, I'm going to trade this if price comes up, pulls back, and this line is starting to either flatten out or curve up. Entirely up to you. If you start doing stuff like that, it actually starts to make it a bit more convoluted, and you're not trading the PIPS Wizard Pro as designed. But it does say in the manual to make sure you are in a trending environment, right? Any method that's not a range trading or a breakout method is going to get chopped to pieces in any sort of range plays. All right, so make sure you're looking for that. And you don't need a moving average to show you that. Just understanding price, it's all you really need. Okay, let's get rid of this. Let's go down to the Aussie US daily chart. We got up here. You see this ranging just before here. Price breaks up, solidly rejected. These are good short trades right here as well. This short trade here rallies against you 63 pips. And right now, if you held on to it, it's up 287 pips. Not bad. This long trade over here, if you held on to here, is 420 odd pips right here. Not a bad way to start your year. Let's go to next chart. US dollar, Japanese yen. Now I want to understand one thing also. Trading is not just about your setup. Trading, the setup is such a small piece of the puzzle. Risk management, risk and trade management, risk control is where it's at. If you can understand that and grasp that, it doesn't matter how you get into the trade. Again here, short trade sets up here. Price pulls back 160 pips. And then price plummets. When do you get out? Well, this is a best case scenario. We got 887. Who's going to get the exact bottom? Not me, that's for sure. Just look at price. So this is your entry. That's perfect. You got your entry. Now you know where to get in the market. Remember what I said, that entries play a small part in the overall trading plans, right? And just use your brain. If you have a setup here, but we have this spike down here, this green candle here, and the next candle is your setup, do you want to trade where price was solidly rejected? No. Just do this. Draw a line. When are you going to get in? When price breaks here, sell stop below here. Yes, price does pull back. Yes, you do get in here. Yes, it does pull back again. Okay? After this forms a double top. Understanding basic price. So again, US dollar, Japanese yen. This trade here, if you got in here, it's 440 pips already. This short trade here, if it went down to right to the bottom, 517. If you get out at these blue things, when they show up, you're getting out at 80 pips. You say, well, let's look at this trade. Remember I said, is it better to use stop orders or get in at the close? Use stop orders, because even the highs and lows can cause support and resistance rejection areas in that area right there. So let price trade, let price bring you into the trade with the momentum in your direction. So you wouldn't get in this trade. This short trade, you'd get in, depending on how close your buy stop order is. You'd get taken out right here. You get taken in here. Price breaks below, you'd be out. And then you would take this short trade, the downside, you get out here. So it gets a little bit sloppy, right? And expect that. There's some traders out there with a 30% win rate making a ton of money. Why? It's about position sizing and risk. That's it. Make sure your winners are larger than your losers. US dollar, Canadian dollar, daily chart, take off right here. These are recent trades, okay? Takes off right to the upside, 300 pips. What we have next? We have the short to the downside. Stop order, depends if you get in, right? This is just a tick in here. Depends. Looking at price action, or what price does. We have our range. These are very common, right? Very common. False break to the downside. Trades up. So if you did take this trade and you took a little loss, you got in here and you got out here, depending on where you get out, where you get in. We've got this long trade here. If you buy stop in, you don't get taken in. If you go in on the close, 170 pip pullback. Ouch, that might hurt. So let momentum come to you. Give yourself a buffer. Some traders will use one, 2, or 3% of the price to the upside before they get in. So at least price is showing determination to get that direction. Pound US. It gets kind of sloppy in here. But if you just look at price action, right? It's telling you it's up right now. You get in at the stop order here. Do you get out here? If you get out here, you take a little bit of a loss. But if you say to yourself, "Well, I'm still got a low here, a higher low here, but a lower a high here." When you start seeing stuff like that, what does this look like to you? Right? What does that look like? But you look at what price is going. When these break out, these can be solid, strong moves. And well, you see it right here, right? This rose 392 pips. So if you positioned yourself in this trade with a stop, you were up in a few days quite a bit of money. Okay. So anyways, let me just wrap it up because I can go on forever about this. If you want to check it out, there's a link below. Just download it. See what you think. Go back, test it. And look at just so you know the times you can use. You can trade it on 15 minutes, 30 minutes, hours, 4 hours, and dailies. All right. Be careful of the Japanese crosses, the yen crosses. They can cause some heartaches at times. All right. Let me know how you do.